Happy Monday, everybody. While today is April Fool's Day, I'm quite sure that if I tried to get too cute with that, not only would my amazing compliance partner not be too happy, no doubt I would not be funny. So today is April 1st, 2024, and this is your Monday market update, the first one of Q2 2024. You know how I love the statistics, so here we go. According to the Carson Group, April has been the second best month of the year for the S&P, going back to 1950. Now, if you only go back 20 years, it was the third best month, and if you only go back 10 years, it's the fourth best month. So let's see how that goes. Last week closed out on Thursday as markets were closed on Friday for the Good Friday holiday, but the news wires were not closed. Quite the contrary. What was to be the biggest news of the week came out on Friday while markets were closed. Let's recap the whole week and let's preview this coming week ahead of us. Last week saw markets gap lower to start the week on Monday, with tech leading the way on the downside for a change. China announced restrictions on certain foreign chips, including Intel and AMD. Intel was down over 4% on the news, AMD not as much. Fed heads were all over the tape. Bostic was on the pushback side from last week's reaction, but Goolsbee was on the other side, 3 cuts coming in his view. There was a large $66 billion 2-year Treasury auction, and it was received well. Most importantly, over 65% of the buyers were indirect buyers or foreign buyers. This is important because one of the fears of the Treasury market is that the foreign buyers dry up. Yields go higher, and that's bad for stocks. So once again, count this piece of news for the bulls. Overall markets were down, but not by much. The Dow was down less than 0.5%, the S&P down by 1/3%, and the NASDAQ was down by 1/4%. The news wires were alive on Tuesday. McDonald's will serve and sell Krispy Kreme donuts in all of its locations by the end of 2026. So much for that healthy fast food idea. Add in that cocoa and sugar costs are still spiking. Supply, demand, right? I'm not so sure about that. More supply side this time. The heat wave in Africa, where 70% of the cocoa comes from, and the dry times in India and Thailand, home of much of the sugar supplies, hitting companies like Hershey and Oreo maker Mondelez, even as the weight loss drugs are tamping down demand for those products. Not sure how Krispy Kreme and Ozempic will mix. Stocks did open higher even with that news or because of that news. Major event in Baltimore is the Port of Baltimore, one of the largest in the East Coast, one of the largest for autos, was shut down due to a container ship hitting and collapsing the Francis Scott Key Bridge. And if you did not see that video, it is worth checking out. Is it normal that I had to ask if it was real or if it was AI generated? Very sad day for the loss of life. Economically, we'll see what it means. Eco data, consumer sentiment was below consensus, pessimistic about the future. Markets don't look like that. If you need another reminder about Bizarro World, Trump Media brought back the old stock symbol DJT back to the markets, and the stock started trading and was up big on the day. Reddit, social media company that it hasn't made any profits in 20 years, just came public and was up nearly 50% on the first day of trading and up another 15% on the second day. The Dow was down just under 0.1%. For the third session in a row, S&P was down about 1/4%, and the NASDAQ down about 0.5%. We always talk about stocks, mutual funds, and ETFs. Exchange traded funds, and that's the ETF. It's the newest of the bunch. We celebrated the 30th anniversary of the SPY last year. That's the ETF that tracks the S&P 500. Last week, we celebrated the 25th anniversary of the QQQs. That's the ETF that tracks the NASDAQ 100. Despite a drawdown of 83% from March of 2000 to October 2002, in 25 years, the QQQ, it's returned 905%, or 9.67% annualized, according to Bespoke. There are now over $9 trillion in ETFs per Bloomberg research, and that's up 32% from just a year ago. 10 years ago, 1.76 trillion, now 9.14 trillion. Back to the market action. Stocks gapped higher at the open on Wednesday as a lot of global eco data moved markets. The Japanese yen hit a 34-year low. Maybe they'll not like all these more records they have. First, a rate hike, first in 17 years, and now record low print on the yen. But that did give global stocks a tailwind, and the Chinese eco data industrial profits up 10% year over year. Then sentiment in the Eurozone was up, easing global growth threats of recession in 2024 for now. No U.S. data to speak of, and limited Fed heads. Waller said that he is in no rush to cut, but he did not push back too hard. Treasury auction for the 7-year notes was, like the other one, strong, like they were all week. Good sign for now. The end of the day brought some more positioning as the month was coming to a close, and then a sprint to the end of the day with a new record high. The Dow was up 1.25%, the S&P up just under 1%, ending that 3-day losing streak, and the NASDAQ was up 0.5%. We did get a settlement 20 years in the waiting from Visa and MasterCard and retailers. This one may seem like a win, but I'll speak about this on another video. But beware. Be careful what you ask for. Lower merchant fees means less profits for the issuers, and guess what those profits supported? Yes, you may wonder how Chase can offer such great credit card points and such. Well, they made $31 billion in swipe fee revenue last year. Watch for tighter credit card deals. Friday Eve came along, and the Thursday market had jobless claims to react to, lower than expected, but that was not the number that was going to move markets. PCE that came out while the market was closed on Friday, that was the big one. Markets opened flat again on Thursday. We closed out an amazing quarter, best first quarter since 2019. More on that in a moment. M&A is moving ahead. The biggest deal Home Depot has ever done, buying a company for $18 billion from private equity holders. Consumer sentiment jumped also to the highest level in 3 years. Dow and S&P both closed at record highs. Dow was up less than 0.25%, but at a fresh record, just under 40,000. S&P also a record, up 0.1%. The NASDAQ closed down for the day, about 0.1%. Before I move to wrap up the quarter, if eco data comes out and the markets are closed, does it make a sound? Well, in this case, Friday brought the very important PCE number, the Fed favored inflation gauge, so they say. The numbers were in line with expectations, so really, no sound. There is still sticky inflation, but nothing is too much at this time to worry the markets, and the futures are still forecasting the first rate cut in June. So far as the Fed, roll on. Powell did speak again in California on Friday, and well, again, if he speaks and the markets aren't open to listen, did it make a sound? Well, again, not really. He said more of the same. He keeps saying that they'll stay patient. Markets lost patience a long time ago. We'll see who holds out better. Let's wrap up and then let's look ahead. What a month. Dow up a bit over 2%, S&P up a bit over 3%. The NASDAQ was up just under 2%. For the quarter, here are some stats, then we'll talk about this coming week. Dow closed only up 5.6%. S&P up 10.25%, the best since 2019, when the Q1 in 2019 gained 13% on the quarter. NASDAQ was up a bit over 9% on the quarter. Some specifics, and they are notable. Apple down 11% on the quarter. Tesla, S&P's biggest loser in Q1, down 29%. The Dow down 6.7% over the past 12 months, Tesla is. The Dow was led by Disney, Caterpillar, Amex, Merck, and Travelers, among others, all up over 20% for the quarter. Nearly half of the Dow's 30 stocks were up more than 10% in the quarter. Boeing and Nike, Intel and Apple, the big losers. 82 S&P stocks hit 52-week highs on Thursday, some of them all-time highs. Last set of stats for today. Top performer in the NASDAQ, you know it, NVIDIA. Yes, up 83% for the quarter. Micron and Meta were up almost 40% each. Add in some non-techs. Constellation Energy was up 58%, and Diamondback Energy was up 27%. By the way, as sectors go, energy stocks as a sector were up nearly 10% for the month. That was also the best sector in March, but it was also the best sector in the quarter. And by the way, for the quarter, tech was only the 7th best. Would you know that? Just based on the news. Let's prep for this week, a full week ahead. First week of the month, first week of the quarter. Yes, jobs week. We'll get the big report if you really think it is that anymore on Friday. I think the market will pay attention, but not so much. Remember, jobs week is also no longer just Friday. We'll get JOLTS, ADP, and jobless claims before Friday comes. We'll also get some eco data, both on the manufacturing side and the service side. The big news will be the slate of Fed heads. But again, I think we'll need to wait another 2 weeks until we get into earnings season. Recall that I tell you it is my belief that earnings drives returns in the long term. So that is where we're watching for either solid numbers or cracks in the stories. As far as Fed heads, 19 chances, some double dips, but we'll hear from Cook, Bowman, Williams, Mester, Daly, Goolsby, Barr, Kugler, Harker, Barkin, Musalam, Logan, and even Chair Powell himself. They'll start talking today and will not stop until Friday afternoon. Please remember, it is my opinion that they will send some of these Fed heads out to test the waters. Don't be surprised if you hear a lot of the no rush to cut story. Let's see how the markets react. Okay, that'll fill us up for the week. I hope you caught Friday's video, the first of one in one that will hit on some important retirement planning ideas in addition to a lot more. Please be in touch with any questions, and let's talk about the plans. Have a great week.